Every bull market looks unstoppable until it isn't. The question isn't if the cycle will peak, but what signs appear as we get closer to that point. And of course, how you use this knowledge is entirely up to you. Some might want to take a few chips off the table after years of hodling, treating themselves to something that still requires fiat. Others might use it to plan their dry powder, to decide whether to deploy now or wait for the next dip. And some simply want to understand where we stand in the cycle, to see the market clearly, without the noise. That's what this whole series is about. Not predictions, but perspective. Because knowing where we are helps you act from conviction, not emotion. Across this 6-part series, I'll walk you through all 30 indicators used by on-chain analysts, traders, and long-term investors alike, the signals that together help map out Bitcoin's position within the market cycle. In this first episode, we'll cover the first 5 indicators, the foundational ones that set the stage for everything that follows. You can find all indicators in the CoinGlass Bull Market Peak Signals dashboard, which I've linked in the description. It's the data set I'm using throughout this entire series. If you'd rather get signal than noise, hit like, subscribe, and let's decode the market like seasoned thinkers. Indicator 1. Bitcoin Ahr999 Index. The Bitcoin Ahr999 Index compares Bitcoin's current price to its 200-day moving average, a long-term trend line used to identify macro phases. It was created by a Chinese analyst known as Ahr999 and later added to CoinGlass. It's calculated by dividing the current Bitcoin price by its 200-day moving average. Values below 0.45 have historically marked deep bear market zones. Between 0.45 and 1.2 is fair value territory, while readings above 1.2 signal overheating. Past bull market peaks occurred above 4.0. Right now, the index cites around 1.1, neutral ground. Perspective from the experienced crowd. The Ahr999 Index is like checking your altitude in a plane. Below 0.5, experienced Bitcoiners quietly buy. Above 4, the smart ones tighten their seatbelts. Combine it with your DCA strategy, and you see the bigger picture without emotion getting in the way. Indicator 2 is the Pi Cycle Top Indicator, created by Philip Swift. The Pi Cycle Top Indicator has identified every major Bitcoin top within days of its peak. It uses 2 moving averages, the 111-day moving average and twice the 350-day moving average. When the 111-day line crosses above the 350 times 2 line, the market has historically entered euphoria. The name comes from the ratio 350 divided by 111, which is about 3.153. Pretty close to pi, 3.142, symbolizing Bitcoin's mathematical rhythm. When that red line crosses above the green one, momentum has run too far too fast, and a classic sign of a cycle top. Here's a bit of seasoned insight. The pi cycle doesn't predict hype, it measures it. When that cross happens, greed has taken over. That's the moment experienced holders stop chasing and start planning for the next accumulation phase. Cycles change, psychology doesn't, and that's why this simple model still works. Indicator 3 is the Puell Multiple. The Puell Multiple looks at Bitcoin's supply side, the miners. It compares the current daily Bitcoin issuance in US dollars to its 365-day average. High values mean miners are earning well above average, often during euphoric phases. Low values mean miners are under pressure and selling at losses. Typical bottom zones. Historically, values above 2.2 have marked cycle tops, and below 0.5 have marked deep accumulation. Right now, the metric sits around 1.0. That's pretty neutral. Here's the smart money view. The Puell Multiple is the miner's heartbeat. When it's racing, the market's overheated. When it barely ticks, that's where conviction is tested. When it screams red, don't chase green candles. When it bleeds green, that's when long-term thinkers quietly start stacking again. The Bitcoin Rainbow Chart. This fascinating tool visualizes Bitcoin's price within a logarithmic regression channel. Each color band you see represents market sentiment, ranging from deep fear in the blue zones to extreme greed in the red. Now, it's important to note this isn't a prediction tool, but rather a sentiment map, showing where the price sits relative to the long-term trend. Touching the upper red band often means euphoria, while dropping into the blue zones signals despair and, historically, opportunity. From a long-term perspective, the rainbow chart isn't about science, it's about psychology. You know, when everyone plans to sell at the red zone, they usually don't. And when fear paints the chart blue, that's when experienced Bitcoiners quietly build positions. Conviction beats prediction every time. Moving on to the next indicator, we have the days of ETF net outflows. This one tracks how many consecutive days spot Bitcoin ETFs have seen net outflows, those days when more capital left than entered. CoinGlass aggregates data from funds like IBIT from BlackRock, FBTC from Fidelity and ARKB. A long streak of outflows suggests institutions are reducing exposure or perhaps taking profits. On the flip side, strong inflows mean rising confidence and growing demand. Currently, flows remain balanced. Some outflow days are quickly offset by new inflows, a sign of a market that's steady but cautious. Now here's an insight from experienced minds. ETF flows are the new heartbeat of the market. Each red day shows capital leaving, each green day shows it returning. Seasoned investors don't react to a single wave. They watch the tide. When it recedes too long, it reveals who's over-leveraged. When it comes rushing back, that's where real strength builds. Together, these 5 indicators paint a picture of Bitcoin's valuation and market structure. They don't predict the future. They help you see where you stand within it. As Bitcoin matures, the line between data and psychology grows thinner. Reading the chart is easy. Reading the crowd is what separates signal from noise. So those were the first 5 out of 30 signals from the bull market peak checklist. In the next episode, we'll dive into the next 5, the ones that reveal the true health of the Bitcoin market and show how institutional capital shapes the cycle. Stay sharp, stay sovereign.